Hi, everybody, and welcome back to the SGK Wealth Compass, where financial insights are clearly explained. Today is Friday, April 24th, and as always, we're going to have John Steigerwald and Eric Randolph talk to you a little bit about what happened this week in the financial markets. Thank you so much, and I hope you enjoy.
Good morning, everyone. My name is John Steigerwald. I am CEO of SGK Wealth Advisors. Welcome to our podcast.
And I'm Eric Randolph, CFP and Portfolio Manager.
We'd like to begin these by talking about what makes SGK unique. As you know, we own individual stocks and individual bonds for clients. We have 4 new stocks we're adding into client portfolios. We're very excited about the prospects. As a client of the firm, we're going to make some money with these. I'm confident of that. Now, one of the things that makes us unique is we write our own research reports for clients. Eric, why don't you talk about that?
Absolutely. So as part of our commitment to transparency, we not only, of course, provide these podcasts and also the weekly missive that you receive in the email, we also, for every name that's in your portfolio, we actually produce a 4 to 6 page thesis, which tells you all about the company, why we like the company, some of the risks involved in the company, and some of the catalysts we think that are going to help move the price forward. And so again, we want you to know what's in your portfolio, and part of that is, and take a look in your portal, you'll actually see one of these theses for each of the names in your portfolio. And I don't believe I've seen anybody else do that.
Absolutely. We believe in full transparency here at SGK and informed clients.
100%.
Thank you, Eric. Yep.
100%.
We had a lot of news come out this week on the domestic front. Why don't you hit some of that?
That we did. Like to start off with some positive news. Okay. So looking at the housing market, mortgage costs declined. The 30-year fixed mortgage actually went down to 6.35%. That's the lowest since mid-March. Buyers apparently are responding. We've actually seen mortgage applications jump 10.1%. It's the biggest jump we've seen since January. Refinancing is also picked up. That's up nearly 6%. Also, contract signings are also improving. So pending home sales up 1.5% in the month of March. And also inventory. So this really what helps. Okay, you have all these people that are caught with the golden handcuffs, right? They've got really low mortgages. They don't want to sell their house and then have a higher mortgage later on. But since mortgage rates have come down, you actually have some of them that are saying, you know what, I can put my house in the market. So now that's increasing. The inventory, that obviously improves the availability for others who are trying to find homes. So that's again, a really great development, as a matter of fact.
Excellent, excellent. And on the labor front, it's kind of a mixed news story this week. Why don't you talk about that,
A little bit
Eric?
of a mixed situation there. So not quite as rosy as what we saw on the housing front. So unemployment claims actually, or initial claims actually rose to 214,000. This is slightly above, not a huge amount, but this is slightly above the expectation. Layoffs actually are still somewhat limited. So again, we're not seeing, it's kind of what we saw the last time that we actually broached the same subject matter here on the podcast. But we're really seeing our employers are really doing a job of husbanding the current list of employees that they have right now, right? As opposed to really letting a whole bunch of them go in big layoffs, right? They're also not hiring on a lot of new people. Right. So one of the phenomena that we're also paying close attention to, and we're going to be following this as time goes along, is that there's a quieter version where they're again slowly letting the air out of the balloon. You have natural attrition, and so you simply don't really rehire a lot of these persons, especially if you have something like AI providing greater productivity. So again, something we're watching on an ongoing basis, but we promise that we'll keep watch of that for you and we'll report. But I know that we got some news as far as business activity.
We did, yeah. Yeah, and April was very, very strong here in the U.S. Now, it's kind of a mixed bag in terms of the story. In early April, U.S. manufacturing activity was the strongest it's been in 4 years, in fact. And part of that, though, is related to the conflict between Iran and the U.S. And inventory buildup. So companies ordering supplies where they can get it. So unfortunately, there's been supply disruption and steadily rising prices. So it's kind of a mixed story there. Good news, bad news story. Also this week, we had Kevin Warsh, Trump's nominee for the Federal Reserve, testifying before Congress. It was really grilled. I didn't watch too much of it just because it got a little redundant, but definitely people wanted to know that he would be truly independent. And the good news is he did cite several times the importance of having an independent Federal Reserve, which we believe strongly in here at SGK.
But still a very convoluted situation.
It is a convoluted situation. He also indicated he would not be influenced by President Trump on the decision to cut rates or increase rates. So
remains to be seen.
Yeah, it remains to be seen. Also, the nomination will be held up while while the investigation into Chair Powell continues. So the market doesn't like uncertainty. So we not only have the Iran-U.S. conflict, but also the uncertainty around, the Federal Reserve, who's going to be chairing that in a month or two. So we hope a lot of this uncertainty gets alleviated in the near term. Flipping to company news this week. We had a lot of companies release earnings. For the most part, we're very pleased with the results. We had one company, IBM, pull back the stock. We saw that. Yeah, they had a great quarter and increased their dividend, in fact, but issued very conservative guidance. This is another example of the uncertainty created by the conflict between the U.S. and Iran. Yeah. They do a lot of business with the UAE, Saudi Arabia. The Middle East is a big area for them. So it made sense to us they issued conservative guidance at this stage of the year. But on a good news front, why don't you talk a little bit about a couple companies that have been in the portfolio for a while?
So there actually are a lot of companies we'd like to report some decent news on. There's just no way possible. There are just so many that reported this week. But let me talk about a name that actually I think a lot of people actually wrote off, and that is Boeing. We've actually had some positive news out of that quarter. Aircraft deliveries actually rose 10%. This is the strongest we've seen out of them since 2019. Cash flow outflow actually was $1.45 billion. That's way better than the expectation. So they're actually, again, cutting the bleed or reducing the bleed, okay? Management target long-term free cash flow of $10 billion. And if I understand correctly, there's potential for there to be some good news from the coming meeting between Trump and Xi in the next couple of weeks. So we could see some orders.
Yeah, let's hope so. I read on Bloomberg, could be a plane order from Boeing to 500 planes. So that would be a good news story for them. Yeah.
That absolutely helps.
Let's talk about a long-term holding, EBB. We added that before you came on board, actually. It's been in stock. We've held for a while.
You can see all these gray hairs here. Okay, so we've had it for a while. So, but yes, very positive news actually on ABB. Just so you know what ABB does, ABB is actually an international company. What they do is they're really a technology leader in electrification and automation. So again, building the components needed for building out the electrical grid, building EV stations, okay? And again, other automation as well. So basically, comparable orders actually jumped 24%, led by what? Data centers. Again, AI. So the war taketh, right? AI is given. Okay. And then also revenue growth is actually seen in the high single digits to low double digit area. Strategic focus, electrification, and automation positions ABB for AI demand. And we're going to see a lot of it.
Yeah, they have a new CEO. He's been there about 2 years. He's really streamlined operations at that company, and the stock's been on fire ever since. So
I know the energy sector, again, some names actually have been impacted there too.
Yeah, so when you think AI and data centers, you jump to like a Microsoft or Alphabet, but it pays to have a diversified portfolio. Yeah, especially this year. Kinder Morgan Inc., they're the largest pipeline company in the U.S. They push natural gas and oil through their pipelines. They exceeded earnings expectations this quarter. And despite commodity prices, natural gas and oil bouncing all over the place, they highlight the fact that they're more of a toll taker. Yeah. In other words, they're not impacted by volatility in energy prices. They have long-term contracts with energy companies to just push on natural gas and oil through their pipelines. And natural gas is in huge demand. And they cite, data center and artificial intelligence demand again. On that note, NextEra, the largest utility company in the United States, we haven't owned that as long as a company like ABB, but it's been a great stock for us. And every quarter they talk about data center demand based on artificial intelligence. So they're in the renewables area, but they also own Florida Power and Light, and that had a blowout quarter. They guided to the upper end of their EPS range for the year, which is unusual this early in the year. So that tells me they're very, very confident. And we like to see that confidence. And they exuded that in the conference call, which, by the way, we participate in.
Excellent.
We had another company, a long-term holding, CACI International.
Yes.
It was very interesting. Great earnings report, by the way, but go ahead.
We're actually going to relate the earnings news actually for one of the names in your portfolio to some news that actually you possibly have heard recently that's related to AI. So CACI, as you already know, actually is a cybersecurity company. really big name, actually here locally. As a matter of fact, they're a local firm. Earnings per share increased 17% year over year. Revenues rose 8.5%, driven by defense and, of course, intelligence demand. Guidance is raised following their Arca Group acquisition. Now, what I'm going to relate that to is many of you are familiar with the situation recently. It came out in the news that there's a private company, Anthropic, that actually has a model that they recently released called Mythos. They actually released it and then they actually retracted it rather immediately. The reason being was that Mythos apparently was able to find vulnerabilities in cybersecurity for a number of financial institutions and were able to actually exploit that. So again, obviously, a very dangerous situation. The fear is obviously if something like that, something so powerful gets into the hands of bad actors, what could they do with that? This really highlights the need for strong cybersecurity, and that's exactly what CACI provides. We believe it just really highlights it even further. We're going to need, again, more and better cybersecurity going forward.
Point, Eric. Excellent point.
Absolutely.
Well, I think that about wraps it up.
That's about it. So thank you so much for spending your time with us today. We hope you have a wonderful weekend. And as we say here at SGK, cheers.